Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Tuesday, May 27th, 2025. Let's take a look at the charts. I'll start with the big picture, and that is that about 4 weeks ago, we closed above that descending 4 or 5 month channel top at 102.39. That was an indication of a trend reversal and likely upward continuation within 3 to 5 months. We'd mentioned back to the January 153.13 all-time high. And, we rallied, I don't know, 60%, 70% of the way up there, and we have fallen away. On the way up, we also closed, this was considered a 1 to 2 week target at 118.96. That might contain weekly buying pressures. We also closed above it. That was a secondary buy signal. And the reason I'm showing that is 118.96 descending 2/3 speed line is our meaningful support now on the way down. You can see here on the speed line on the daily chart, it's actually 118.54. I'm kind of rifling through the images here. This is the one I actually really want to show as I come to the day itself and the week ahead. We had last Wednesday a key reversal high and settlement below a 1 week channel bottom at 133.77 today. That is Tuesday. We also have the high settlement price that was put out a week ago, Monday of last week, and that is 135.57. And so it is that narrowing zone this week that is our resistance, able to contain weekly highs. And below which, rather than continuing on up to what has been our objective at 145.04, which we'd been anticipating, you could make a case that we came kind of close to testing it a week and a half ago, but we didn't actually test it. We got into a consolidated framework. Then Wednesday of last week, key reversal high, and then holding below this short-term 1 week channel bottom at 133.77. So the emphasis is now to the downside near term, and that is essentially a counter trend sell-off. In other words, near-term weakness within the confines of a longer-term buy signal that emerged a month ago above 102.39 and secondarily a couple of weeks ago above 118.96. But as I say near-term, we can fall back to that 118.96. And I'll take us back to this image here, which is 133.77 to 135.57. That is your key resistance for the week itself. May well contain weekly highs, and below which this narrowing zone between 115.45 and 118.54 remains a 2 to 3 week target. And on the way down, we have a lot of minor points for aggressive day traders. And what I mean by aggressive day traders, I should probably use the word high frequency day traders. In other words, looking for more than just the setup of the day, but rather they follow 5, 10, 30-minute bar charts and trade throughout the day. These minor points are well suited for that kind of trading because they relate to something on the chart that we actually don't show because there's just not enough room in the newsletter. But 3 to 5 day swing traders, more like a 2 to 3 day swing trade right now, below 133.77, short sale in the 133 to 135 handles, buying back at 127.72. Should you go long at 127.72? I'm not crazy about it. It is a upside, a former 5/8, but we pushed right through it a couple of weeks ago, and we've yet to fall back to retrace to it. They can behave pretty well in terms of offering at least day support. Yes, we might get a 1 to 2, 3 day bounce back into the 130s, but I do think that closing below 127.72 is an eventuality, probably later this week. And if today, we could, under that scenario, by Friday's close, fall to our targeted 115.45 to 118.54 area. So once again, if you're a 2 to 3 week swing trader, you're selling short or you are already short and you're holding that short up into the 133.77 to 135.57 area, anticipating bearish continuation to 115.45 to 118.54, where profits can be taken and long entry made on a position that could then round back up to new highs within several weeks. 3 to 5 day swing traders can sell the 133, 135 handles, anticipating 127.72. And if we close below 127.72, they can go short or if they haven't already, they can go short down to 115.45 to 118.54. I think I've defined the downside pretty well. If we did close below, and we don't have it entirely mapped out yet, 115.45, I would expect then this 102.39 descending channel top. But we'll be looking at other elements at that point in time. But this is probably a good image to show that if we close below the speed line on the daily chart that is at 118.54 over the next couple of weeks, then we continue south to this former channel top at 102.39 and dropping into the upper 90s over the next week or two. So there's that. Upside. What if we happen to, close back above the 135.57 level? Well, that is an indication, at least from my perspective, that we've got a good low for the week, and we are likely to then see continued gains over the following 3 to 5 days, perhaps, to 145.04. Now that would be an aggressive 3 to 5 day rally. Now you can see this channel top at 145.04. It became a 1 to 2 week objective a couple of weeks ago when we closed above this 118.54 speed line. And so 3 to 5 days might be a little robust. It could take the better part of 2 weeks. And the funny thing is, this formation is by early June converging anyway with 153.13. But nonetheless, closing above 135.57 is an indication, number one, if you're short and you're a 2 to 3 week or 3 to 5 day swing trader, you want to at least exit that long position. Cover that long position, the short position, and consider going long. Closing above 135.57, I think we've got a clear shot for that 145.04 channel top within 1 to 2 weeks. And over the next 2 weeks, it converges anyway with 153.13. So this is kind of another way of us saying that if we do happen to close back above the 135.57 level, that you should then anticipate reaching our overall objective at 153.13. That was mapped out 4 weeks ago when we closed above the 102.39 level. So yes, we still remain bullish. We're aggressively buying downside pullbacks into the 118.96 area. But if we happen to close below that 118.54 on the daily chart, and let me actually provide a better picture of it. This is the rising channel bottom, descending speed line, the 115.45 to 118.54 area. An aggressive buy area that we're expecting over the next couple of weeks, over the next 3 to 5 days below 127.72. And if we were to violate this, that would be a significant sell signal into later June, and we'll cover that properly at the time, but we're not expecting that. So this is an aggressive buy in the 115, 118 area because we're still in a meaningful buy signal that was elicited a month ago above this descending 4 or 5 month channel top and secondarily above the speed line at 118.96. I just want to mention that wickedstocks.com puts out 2 stock picks a week, catering to 3 to 5 week to 3 to 5 month near-term investors, daily triple Q, daily SPY analysis, a weekly analysis, and Apple. So you can check that all out for free by going to wickedstocks.com and taking advantage of our 5-day free trial. You might want to stick around after that once your 5 days is up, or you might not. That's entirely up to you, but we want to at least offer that so you can see what we provide to you on a daily basis. There's just a lot of good analytical studies, good, useful trade recommendations across the board that you don't see really on YouTube. So I'm going to leave it at that. Please click like, share, subscribe. I'll be back tomorrow, of course, with Wednesday's NVIDIA. You have a great day.